Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus is on Bank of India's Q2 numbers. It's a reported strong set of numbers on the bottom line, a 63% or a year-on-year jump in net profit to 2,374 odd crores. This was backed by a 49% surge in the non-interest income as well. Remember, the NII has also expanded by 4% year-on-year to 5,986 crores in Q2. This is as compared to 5,740 crores in the same quarter last year. What we have also, however, seen is that the NIM has declined to 2.82% as compared to 3.08% in Q2 of FY24. The asset quality profile, however, has improved. On the gross NPA level, it's declined to 4.4% from 5.8% a year ago. And what we've also seen is that the net NPA has declined to, from about 1.54% in the September quarter of 2024, whereas it has now come to 0.94% in September of 2024 as well. Let's get to understand the key driving factors for this quarterly earnings and the outlook going forward. Mr. Rajneesh Karnatak, the MD and the CEO of Bank of India, is now with us on the show. Warm welcome to you, sir. Thank you so much for taking the time out. Congratulations on the strong bottom line growth that you have reported in Q2. Do tell us any 2 or 3 key factors that you believe have been behind the strong showing, and will these factors continue for the rest of FY25 as well?
Yeah, as you rightly said that we have improved our net profit, and for the quarter it is more than 2,300 crores and the growth is nearly 63% on that. And it is at the backdrop of improvement in the non-interest income and also the net interest income, which has grown by nearly 4% on a YOY basis. So we will be sustaining these numbers. NIM, as you said, that it is 2.82 for a global number. Just let me clarify over there that our domestic NIM is at a healthy number of 3.14%. The global NIM is at 2.82%. And
Okay.
for that, so the thing is that if you see the entire global book, 15% of our global book is the international book, where the NIMs are quite fine, because of which the overall NIM comes down to 2.82%. However, let me clarify again that here the NIMs for Bank of India have bottomed out, and for the Q3 and Q4 quarters, the NIMs will be better and will be able to sustain the numbers which we have shown in Q2 of this financial year.
So for FY25, what is the NIM outlook that you have?
Yeah, for the FY25, the NIM should be at around 2.90%.
Okay, got it. Now let's also talk about the key segments that have driven the robust credit offtake this time around, and what is your own loan growth target for FY25, sir?
So as regards the credit book is concerned, you must have seen that on the global advances, we have grown at around 14%. Domestic advances of the bank have grown by nearly 15%. Within that, if you see the RAM book has grown by nearly 19%. And within that, retail book has grown by 21%, agriculture by another 21%, and MSME book by 15%. The incremental growth in credit has been around 78,000 crores, and the deposit growth around 72,000 crores, which means a YOY growth on the business side by nearly 1.5 lakh crores, 1.5 trillion. The pipeline is around 70,000 crore plus. So we are very confident that whatever the number and the busy season Q3 and Q4 now coming, we are very confident credit growth should be at around guidance number of around 13 to 15% on a global basis.
Understood. Could you also tell us how was the kind of festive demand this time around in the quarter gone by, and will we see the trickle down impact in Q3 and Q4 as well of the same? Wedding season is also starting from today, so will that also come in?
Yeah, very good robust demand we have seen in the credit side in the October month, and that is continuing in the November month also as we see today. We are very confident that with the busy season coming, Q3 and Q4, the credit growth will be higher, disbursements will be higher, and we'll be able to show a better net interest income for the bank.
Okay. And on the NII front, sir, what is the kind of growth that we can expect by the end of FY25 versus FY24, if you could mention?
Yeah. For NII on an annualized basis, we are saying that the NII should improve by should be at around 10%.
Should be at around 10%. Understood. Do tell us, sir, where does the credit to deposit ratio really currently stand, and what measures are you taking as a bank to boost the CASA levels currently?
So CD ratio, if you see on the global level, it is at 80%. On the domestic side, if you see at a very healthy 77%. At the global, it is because 80% because on the international book, as I said, 15% of our book is international. There normally the deposit is equal to the advances, and we do some borrowings from high street banks at very fine rate, through which we meet the credit demand at the international level. Because of which the CD ratio At the global level is at around 80%. Local level it is 77%, which is very healthy, and will be maintaining at 77 to 78% CD ratio at the domestic level. As regards your question with respect to the growth that we are seeing, again, the growth will be, as I said, will be at around 14% for the credit side. On the CASA numbers also, if you see on the resources side, we have been able to raise resources. 20,000 crore is the incremental increase in CASA on a YOY basis for the bank, in spite of the challenges which the entire system is facing on CASA. The growth in CASA was around 7% on a YOY basis. On the deposit side, also term deposit side, we have grown by nearly 55,000 crores. So as regards the growth which was happening in the credit, which was more than the deposit, there also let me clarify that we have other resources also, like we raised 5,000 crore of infrastructure bond, 2,500 crores of tier 2 bonds. In this quarter, in this half year also, we'll be raising another 5,000 crore of infra bonds and another 2,500 crores in the tier 1 bonds. Apart from that, we are getting also done some refinancing from some financial institutions, and we also are having nearly 40,000 crore plus of excess SLR, through which we are like borrowing also at fine rates. All these things are assisting the credit growth, funding of the credit growth, not only through deposit side, but other resources also. So we are very
Okay.
confident that the credit growth will be maintained.
Okay. Sir, are there any fresh concerns about asset quality? We've seen their provisions for non-performing assets have more than doubled to 1427 odd crore rupees in Q2 as compared to 678 crore rupees in the year ago same quarter period. And you've also made about a 200 crores provision for one lumpy telecom public sector unit which has become an NPA right there. Could you detail for us what is the scenario right now and what are the expectations?
Yeah, as regards the NPA is concerned, you must have seen that from the provision of around 1,200 crores in Q1, the provision has increased to around 1,400 crores. That 200 crore increase is because of the one single account which has slipped, and we have made the provision as per the RBI IRAC guidelines. As regarding the future is concerned with respect to the asset quality, let me clarify. If you see our SMA book above 5 crores has come down from 9,600 crores to 7,600 crores. It has come down by nearly 2,000 crores, and it is only 1.29% of our standard loan book. So there is no challenge over there, and whatever the SMA is there in the corporate book itself at present, because of 3-4 accounts which are for state PSU accounts, and there too the asset is backed by some securities. Cash flows are also there, and government guarantees are also there. So we do not anticipate any further corporate slippage in the ensuing 2 quarters, and the asset quality should remain healthy. Overall, we are giving a guidance of a credit slippage ratio of around 1.4% for FY25, in spite of the fact that there has been one lumpy slippage this quarter.
And what is your provision coverage ratio? Where is it at the current moment, sir?
So provision coverage ratio is at a healthy number of 92.55%, and we expect that it should improve in this current financial year.
Okay, let's understand what has also contributed to your overall performance this quarter. That is the non-interest income that's surged by 49% year on year, sir. There are gains from sale and revaluation of investments that have grown multifold for you. Could you detail for us how has this panned out? What is the projections going forward on the non-interest income particularly?
So as regards non-interest income is concerned, we have shown a number of more than 2,500 crores, and it has grown by nearly 49%. Within that, there are two main items over there. One is the income from the treasury. So we have a very healthy treasury group, which we are taking some mental calls at the time when the market is there to sell and book some premium and profit out of that. So that will continue in the ensuing 2 quarters also in Q3 and Q4. As regards the recovery from return of account, that is another source of non-interest income, wherein 7-8 accounts in the NPA were there where recovery happened during this quarter. And in the ensuing quarters also, we have a pipeline of some NPA accounts where there are written off, and some recovery will happen in the ensuing December and March quarter of 25. And there has also been income which has come because of the RBI circular with respect to the non-interest income penal charges. So penal interest is now taken care as a penal charges now in the banking system. So there also increase has been there in the non-interest income because of that. And that is also one of the reasons the non-interest income has come down to that extent.
Okay, got that. Well, thank you so much, sir, for detailing for us all those key insights for the quarterly earnings. I wish you all the very best for the upcoming quarters as well, and would look forward to more insights and outlook on the vision that you have for the company going forward from here in the coming quarters. Thank you so much for speaking to us. Always a pleasure to host you.
Thank you so much, and thank you for having me. Thanks.
Thank you. With that, we wrap up this exclusive conversation with Bank of India. Good set of numbers coming in. We've also seen the kind of guidance that the company has given on the NII and the NIM front as well, which should be improving going forward from here in the second half of the fiscal year 2025, and several other key factors that have been highlighted on the asset quality and the slippages front as well. I'm sure this has really given you a lot of clarity as to how the government, how the management is really looking at the current numbers and the projections going forward. Many thanks for being with us, but do stay tuned. Business Today Television will continue to get you exclusive chats with top managements of the companies that are reporting their Q2 numbers, as well as our top market masters, to really guide you through the current setup in the market. Stay tuned.
Women who mean business. Women who lead businesses